Canadian Tire stock fell nearly 8% on Thursday after reporting earnings. Did the company do bad, and is the stock in trouble? In this video, I'm going to cover its latest earnings numbers and go over whether or not it's a good buy on the dip. Here are the key numbers from the company's Q4 earnings. Revenue rose by 1.6% year over year to $4.4 billion. Net income more than doubled to $411.5 million, and diluted EPS did the same. More on that in a little bit. Its consolidated retail sales also rose by 1.1%. The comparable numbers were positive, with Mark's leading the way with comparable sales growth of 1.8%, followed by Canadian Tire at 1.1% and Sport Chek at 0.4%. At first glance, the numbers look good, with sales being positive and profits up big as the company's bottom line soared. But here comes the catch. The bottom line was boosted by a gain on the sale of a Brampton industrial property, which Canadian Tire completed in December. When stripping that along with other items out, the company's normalized net income was much lighter at $247.5 million. That's still a 16% increase from the previous year when it reported $213.1 million, but it's a much more modest increase overall. For investors, however, the big concern is what lies ahead for retail. The threat of tariffs in the US and reciprocal ones in Canada are weighing on many Canadian businesses, especially retailers. In the past 12 months, the stock has been a lackluster buy, rising by less than 3%. Here's what bearish and bullish positions might look like for the stock right now. Let's start with a bearish case for Canadian Tire. US President Donald Trump looks to be relying on tariffs to generate growth in the US, and that appears to be a big part of his strategy for his presidential term. And if that's the case, you can expect a tough path ahead for retailers such as Canadian Tire. Even if consumers buy Canadian, the problem is that rising costs could put a dent in Canadian Tire's profits. They could also diminish the purchasing power for consumers, so overall spending may be down anyway. The end result is worsening financials for Canadian Tire, potentially for as long as Trump is in office. The stock hasn't been a good buy. Even over a 5-year stretch, its gains are almost flat. There may not be a whole lot of hope that the stock can rebound anytime soon. And while it looks cheap, trading at a forward price to earnings multiple of 12, that may not be a compelling enough reason to buy the stock. There's still plenty of risk ahead. Now, let's look at the bullish case for Canadian Tire. While the near term looks troubling for Canadian Tire, but if you're a long-term investor, even a 4-year period may not be all that long in the grand scheme of things. And Trump is all about making deals and bluffing. He postponed tariffs which were set to start earlier this month, and it's anyone's guess whether he'll put them in place next month or how long they'll even last. Investors shouldn't concern themselves with government policies because they can change and can be impossible to predict. What matters is the business and its fundamentals. And Canadian Tire, being a top consumer brand with many loyal customers, can be an excellent long-term buy. Buying it at a cheap price also means that investors get a good margin of safety with the stock should things go south. And there's also that dividend, which yields 4.5%. That gives you plenty of incentive to just buy and hold. So, should you buy the stock? If my priority was dividend income, then Canadian Tire is a stock I'd buy. It's a good payout, and the payout ratio is fairly modest at around 60%. It's in no danger of a cut anytime soon, even if the company's financials worsen. However, besides dividend income, there isn't a compelling reason to buy shares of Canadian Tire. The company's growth prospects don't look that great, with or without tariffs. There's loads of competition, especially from online retailers these days, and there are much better growth stocks to consider out there. Canadian Tire may not be a bad buy, especially if the tariff threat doesn't turn out as badly as many fear it will be, but it's not a stock that I can see taking off either. Canadian Tire is a decent stock, but it just isn't anything to get too excited about right now. That's a wrap for this video. If you liked my unbiased analysis, I don't have a position in this stock, please make sure to leave a like and subscribe for more videos like this. Thanks for watching.